How much tax does a small business typically pay? Watch this video to understand the different types of taxes that a small business typically pays, as well as smart ways to legally reduce the company's fiscal debt. A must-watch for entrepreneurs and startup founders, along with owners of established businesses. Keep in mind though, that tax laws change from time to time, so this video uses average tax rates in the last 25 years and, when available, information from the most recent tax bill enacted. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I'm doing fantastic. If you're doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. Today I want to talk to you about how much tax does a small business typically pay. Now, what is a corporate or business tax? Let's first go to the basics, the fundamentals quickly here. A corporate or business tax is charged on the profits of a company. Profits, net income. No, gross income. So federal taxes for partnership and S corporations are due every year on March 15th. They may be able to file for a 6-month grace period, extending the deadline, in this case, to September 15th. Now, individual taxes and C corporation taxes are due on April 15th, with a potential extension to October 15th. Again, here we have the same 6-month grace period. Payments can be mailed by installments every quarter, so the IRS is very flexible. So beginning in April, you can make quarterly installments, and the final payments will be due in December. Now, when it comes to income taxes are federal and, in most cases, state income taxes to contend with. You need to take care of that. Whether the business pays the tax, as in the case of a business organized as a C corporation, or the owner pays the tax on his or her share of business income and expenses, as in the case of a business organized as a sole proprietorship, partnership, limited liability company, LLC, or S corporation. In that case, when the company doesn't pay taxes and the income is transferred to the owner, we're talking about a pass-through. So the fiscal term here is pass-through taxes, pass-through entity. So business experts, fiscal experts will talk about a sole proprietorship, a partnership, LLC, or S corporation are considered a pass-through entity. Now let's talk about small business tax rate. When you generally think about business taxes, a lot of people think about business income tax rate, right? That's what they're thinking about at the federal level and the state level. Now the National Federation of Independent Businesses says that most small businesses don't pay income tax at a business rate. That's because about 3/4 of small businesses are not corporations. They're not. Because the large percentage of small businesses are considered, as I said earlier, pass-through entities, which means they pay taxes at the personal tax rate of the owner, right? Because they're not a C corporation, they're not established as a C corporation, but rather as a sole proprietorship, a partnership, a limited liability company, or S corporation. So since small business or non-corporate tax rates are tied to the total income of the business owner, we got to look at the income tax rate of the owners, especially in the last 5 to 10 years. Now, what is the corporate tax rate? Larger businesses, I'm talking about the C corporations, and those taxed as corporations have the biggest tax cut under the new law. I mean, a lot of laws have been passed over the last 5-10 years. Every 10 years, every 5 years, with the arrival of a new president, we have a tax cut. So right now, the larger businesses, the multinationals, the biggies, if you will, they have had a big tax cut. The corporate tax rate was cut from a table with the highest corporate taxes to a flat 21%. And in some cases with some very creative fiscal shenanigans, if you will. No, I'm just kidding. But with some creative fiscal optimization process, you can reduce that rate to 15% or 10%. All right. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are still having a conversation here about how much tax That is, does a small business typically pay? If you love the clarity and quality of the content so far, please consider subscribing to our channel and turn on the notification bell. Also, comment below, let us know your experience when it comes to taxes at the small business level. Of course, this content is it really applies more to the United States and Canada in some cases. And let us know how things are in your country if you're not from the US or Canada. We really will appreciate you sharing your info here. Let's talk now about what other taxes does a business pay, because the title of this video is about how much tax does the small business typically pay. So we're not talking only about income taxes, right? So in addition to income taxes, the largest tax bill small business pay is for payroll taxes. I'm talking about, and these taxes are generally based on employee pay at the rate of 7.65% on employee gross payroll. So you have other payroll taxes such as unemployment taxes, workers' compensation taxes. So if you have employees, you need to withhold income taxes and the employee's share of Social Security and Medicare taxes. That's what's called FICA. You must also pay the employer's share of FICA plus state and federal unemployment tax. So basically, the employee will pay 7.65% and the employer will pay the same percentage. If your business is incorporated, you are an employee if you work for the business, and you owe these taxes even if you are the only employee. So if you are self-employed, you owe self-employment taxes, the equivalent of the employee and the employer share of FICA on your net earnings from the business. In addition to all those payroll taxes, a business must pay sales taxes. So if you sell goods and services and you're based in a state with the sales tax, you may be required actually to collect sales taxes on your transactions. Now, I'm not saying you are the one paying that, but you might pay that if you are buying stuff for the consumption of the business. But if you're selling stuff, if you're selling products and services, you collect that and you have to give the money to the state revenue authority. So while the customers pay the sales taxes, you can be subject to penalties for failing to collect the taxes and pay them to the state. You also have excise taxes. Depending on the type of business you operate, certain businesses may pay excise taxes on fuel, for instance, right? Highway usage by trucks and for other activities. Now, here are other taxes your business will be responsible to pay. Capital gains taxes. So let's say you do investments, and on the sale of business assets, if you sell business assets, you have to pay capital gains taxes. Now, long-term capital gains, in other words, assets were held more than a year, they're taxed at a different level depending upon the income of the business. Short-term capital gains are taxed as ordinary income. Let me repeat that. If you sell a business asset and the asset has been held for more than a year, the gain will qualify as a capital gains tax, and that tax rate is lower. It's around 15%. It's lower than if the asset that you sold were a short-term asset. In other words, you've held the asset for less than a year, in which case the gain becomes a short-term capital gain, and that's taxed as the ordinary income. So if your business is taxed as 25% or 30%, the gain will be taxed at the same percentage. So businesses must pay also property taxes on real property. I'm talking about buildings and land owned by the business. Your business must also pay tax on dividends it receives from business investments. Now let's talk about state taxes for businesses, because so far I've been talking about federal taxes, but you also have state taxes. For a state to have an income tax, the new tax law, whatever the law is, whether it is the coronavirus support law or any other laws we've had in the past, will basically affect how state income taxes are calculated. Some states have a better business tax climate than others, right? So you want to take that into account. The one thing you also want to pay attention to is how quickly tax laws are enacted in the states where you operate, where you have a material operation, a significant operation at the business level. How do small business owners pay taxes? Now, we have dedicated an entire show on that topic, but here, for the sake of brevity, let me quickly say let me say this: most small business are owned by individuals, right? So partnerships, LLCs, and sole proprietor businesses pay no business taxes, as I said earlier, but the tax is passed through to the owners and is paid by the owners on their personal tax return. Hence the term pass-through entity. So if you're asking how much tax the business owner pays, that means that you're asking how much they're paying at the personal level, not just for the income of the business. So people have multiple sources of income, and you cannot find out how much they're paying on one particular business if they have multiple sources of income, right? So the only type of business that paid taxes on its own is a corporation, a C corporation. So the corporation's owner don't pay any tax on the corporation's profit, because otherwise you would have something called double taxation, right? But the owners are taxed on their income if they work as employees. So if you have a CEO or a CFO, they are paying taxes as employees. They're also taxed on dividend income they receive, right? And that's the so-called double taxation issue. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Q. We're really having a conversation around how much tax does a small business typically pay. Now, let's talk about the effective tax rate. There's something called effective tax rate. Small businesses of all types, they pay an estimated average tax rate of 20%. The effective tax rate is the average rate of tax for a business or an individual taxpayer. So that rate, that effective tax rate, is usually calculated by dividing the total tax paid by the taxable income. Let's say, for instance, you made your business, or you as a person, as a business owner who pays income at the personal level, you made all in all this year $100,000. And when you did your calculation, everything, your tax due is $20,000. In this case, your average effective tax rate will be 20%. In other words, you divide 20,000 by 100,000, right? So the other way to look at tax rate is the marginal tax rate. And this is the highest rate paid by the business or individual. So the corporate tax rate table, for example, has different tax rates for different taxes, different levels of corporate income. The thing here you have to understand is that you want to pay attention to your average effective tax rate over the years to predict how much you would pay in the future. That way, you're not getting penalized by the IRS for underpayments. The IRS will never penalize you for overpayment, that's for sure, but they will penalize you for underpayment, and they do this not only for companies but also for individuals. Let's talk about taxes for an LLC business. Now, one thing we were talking about here is that remember that the LLC business type is not considered a tax entity by the IRS. The IRS, if you look into the IRS code, the Internal Revenue Code, there is no such mention of LLC. An LLC with one owner, that's called a single owner LLC, is taxed as a sole proprietorship with tax liability calculated on Schedule C of the owner's personal tax return. Now, if you don't have a multiple, if you have instead of a single member LLC, you have a multiple member LLC, those are taxed as partnerships, right? In both cases, though, LLC taxes are passed through to their owners. So as a partnership, you have to pay this on Form 1065, which is the form that every partnership has to file with the IRS. There will be mention of the share of income and losses, or income or losses, that every member of that partnership has, so that the IRS can reconcile the data provided by the partnership with the data that each member of that partnership provides the agency. Let's talk about qualified business tax deduction. Now, what is it? there is something called qualified business tax deduction. This is something that Congress has pushed for, and they do this every now and then, especially when there is a crisis, as we had in 2008, as we're having in 2020 with the global pandemic. So what's happening here is that the small businesses are able to get something called qualified business tax deduction, and the thing here is that the tax can be passed through to the owner. Now, this is one of the reasons why the IRS has restricted that deduction. But if you can find a good CPA, a good tax attorney, or a good enrolled agent, they could help you qualify for that. They can help you apply the qualified business tax deduction on your small business, right? Because if you get it right, this deduction is worth 20%. So using this deduction, that means that a small business with a taxable income of 100,000 only has to pay taxes on 80,000 of that amount. Isn't that beautiful? So that's wonderful. Now, one thing I want to mention, though, that in this show, we do not provide tax or legal advice. We are an infotainment show. In other words, an information and entertainment show. In this case, we are providing information based on research our team has conducted. If you need particular advice, I would strongly advise you to enroll, to enlist the help of a tax professional, of a CPA, a certified public accountant, of an EA, an enrolled agent, or a tax lawyer. Somebody who really understands the subtleties of the tax code, as well as the particular information you need about your business. Okay, so this is it, folks. Let me just quickly recap today's conversation. I talked about what is a corporate or business tax. I talked about small business tax rate, the corporate tax rate, what other taxes does a business have to pay. I talked about state taxes for businesses. How do small business owners pay taxes? I also talked about something called the average effective tax rate, and as well as taxes for LLC businesses, and something called qualified business tax deduction. Now, remember too, though, before I close this, that as a small business, the amount of tax you pay depends on the state in which you do business. So the taxes range from federal and state payroll, unemployment, and capital gains taxes, but the states where you live is very important. A state like Alaska, for example, doesn't impose sales tax, and all of this add up. So you could be saving a lot more money. Now, I'm not sure when it comes to other factors. Alaska is a great place to do business, but again, it depends upon your business, depends upon your own personal vision, your mission, and this kind of stuff. All right, I will see you next time. Thanks so much for listening, and until then, remember, stay marvelous.